Hello and welcome to Earning Express. I'm your host Nikki Mirchandani and we are here to talk about Infosys earnings. Well, it's been a beat on earnings front. Dollar revenue guidance has been slashed lower. But if you talk about the dollar revenue growth, beg your pardon, that's been a bit of better than estimates. But on a flip side, we have seen the playbook being pretty much played out in this quarter. Upper end of the constant currency revenue growth guidance has been cut to 2.5 from 3.5 earlier, and the constant currency revenue growth has been revised now to 1 to 2.5% from an estimate of around 1 to 3.5%. Overall constant currency revenue growth now in this quarter on quarter basis stands at 2.3% versus a number of 1% that we have seen in the previous quarter. Perhaps something that the street could be a little bit excited with, but in terms of the basic numbers first for you, the net profitability has come in at 6,212 crore as compared to a number of around 5,945 crore in the corresponding quarter of the previous year. The street was working with an estimate of around 6,225 odd crore. The revenue has come in at 38,994 crore as compared to a number of 37,933 crore in the previous quarter. EBIT margins have come at 21.2% in this quarter versus a number of 20.8% in the previous quarter. The street was working with an estimate of a number roughly around that 21%. So it is more or less in line with what the estimates or the CNBC TV18 poll was suggesting. Dollar revenue is come up at $4,718 million as compared to $4,617 million of the previous quarter. But to know more about the numbers and the initial assessment, we've been joined by Kranti Batani, equity strategist at Wealth Mills Securities Private Limited.
Hi Nikki, thanks for inviting me on your show.
Right, pleasure is all ours. Kranti, what do you make out of the initial numbers? For TCS, there was no major firework which was expected and pretty much in line. But what do you make out of Infosys? Perhaps a bit of surprise coming in on the dollar revenue growth coming in there?
Absolutely, Nikki. We can see some kind of relief. The street was expecting the softening of the numbers from Infosys also. And if we go with the numbers, as the profit has in line with the expectation from the street also, around 6,212 crores, and the revenue, as rightly mentioned, it is at par with the expectations. What we can see at this point of time is we can see some kind of pressure with respect to the banking and financial service segment is concerned, despite of the concerns in US. Right now, what we can see is the numbers are looking as per the expectations at this point of time with respect to the overall performance of the company. What we can expect is the management guidance is crucial now onwards. How the numbers are going to be panned out in the next, at least coming 2 quarters, is extremely crucial for Infosys performance is concerned. They surprised the street with a interim dividend of 18 rupees also, but overall the numbers are in line with the expectation, and it surprised the street in one way.
Sure, the EBIT margin guidance has been maintained overall, and if you talk about the upper end of the constant currency revenue growth guidance, however, that has been slashed to 2.5% from 3.5% earlier. Do you think this was pretty much in line with the expectation, or you think this might just come out as a little bit of disappointment because analyst community was penciling in this kind of narrowing of range, if not for more? Constant currency revenue growth revised to around 1 to 2.5% from 1 to 3.5% earlier. How do you read into it?
Yeah, Nikki, the expectation from the market was expecting in one way the subdued kind of guidance, but going with the numbers, it is in line with the expectation at this point of time. What I am more keenly interested is the management guidance. Okay, in line with the expectation, the numbers seems to be at this point of time. What we are looking forward is the next coming quarter, how the guidance of the Infosys, that is extremely crucial. One thing is very clear: the US economy is going strength to strength, but we can see some kind of margin pressure with respect to the numbers are concerned, especially we can see in banking and financial services.
Sure. There is an extended development which has come through, perhaps a little bit of important development for Infosys. Infosys and Temasek has extended the digital services joint venture for a period of 5 years. The extension, perhaps, as per the press release, demonstrates shared objective of creating impactful digital transformation and investing into digital talent in Singapore. How do you read into that?
It's an important development. What we can see is, we need to see the realizations for a period of time. Okay, this and also right now the focus is mainly on banking and financial services, and the other players like the TCS. If you have to compare, okay, the focus has been going up with respect to the healthcare and other verticals. So Infosys also has to make their guns with respect to the other verticals in the coming quarters. That's where we can see, and the cyber security and the AI. These are the new segments. How the company is going to plan their upcoming projects with respect to these verticals. Also, we need to see clearly. Management guidance and initial commentary is the game changer for Infosys going ahead.
All right, we have also Prakash Diwan now joining us, the market expert, talking about the earnings, the big boys earning. Evening there, how are you reading through? What stands out for you in terms of the numbers for Infosys? Three factors, perhaps negatives and positives for you within this earning.
So, good evening, Nikki. But I think there's a little bit of a dichotomy which I can sense from the Infi numbers. You have a very marginal growth in dollar terms on the revenue. You have a very decent maintenance of margins at about 21 odd %. But and they've also reported TCV value, the deal wins at 7 billion plus. So that is a huge number, and I'm guessing they are also falling in line with the way TCS reports renewed and new contracts coming into the TCV. Earlier they used to just talk about new wins, not renewals. But 7 billion can't be just new wins in an environment like this. So I'm assuming it's both. Now, if you have 7 billion kind of a number on the TCV, which is where new business is likely to come, and then you're reducing the upper end of your guidance by 100 basis points. So that is a bit confusing. So there's something amiss in terms of, and we've seen the kind of build up on these new wins from Liberty House, from the Nordic Bank, from some of these well-known marquee clients, and the sizable in quantum. But if all of that were to be in place, Nikki, question that comes up is the disappointment is, why is the margin coming down, or the guidance for the next 2 quarters coming down? And that could possibly be either there is something which is likely to be some sort of a ramp down from clients, certain large clients that they expect, and which will impact their revenue growth. And hence that's the worry. So if TCV is healthy, it's one of the best in the last many quarters, almost the last 8 quarters. Why would this be low? So that is what we need to understand from the management commentary. Otherwise, I think from a attrition perspective, also they are very much in line with what TCS also indicated. If you see the head count, from 230,000, it's 222 odd, so about 7,500, 8,000, which is fine. So everything seems to be in line with the expectation and what they'd spoken in Q1. But this is something which needs a little bit of deep dive. And once that is out of the way, you could probably take a slightly better, bolder call on what to do with the stock.
Point well taken. Perhaps that's the point that we need to highlight here. Like Prakash has been mentioning, that there is a strong TCV of $7.7 billion as compared to a $2.3 billion that the company registered in the previous quarter. But the revenue guidance has been cut for the second straight quarter to to 2.5% to 1 to 3.5%. So the range has been narrowed down. Prakash, do you see that pretty much in line with estimates, or do you read between the lines with this too?
No, so it's not something which figures completely, because Q1 also they spoke about. Q4 last year they spoke about a reduction in the revenue growth band, and then Q1 also they said the same thing. And now it's kind of for the whole year as well. It's about 100 basis points. So from 3.5 to 2.5 is a significant change. So there is a little bit of a confusion in terms of either the cost of conversion is much. The pace of conversion is going to be much longer. That's why the TCV translation into revenue is not reflecting in the growth numbers, or there is some ramp down which the management is anticipating, which we don't know of. So I would definitely be a bit cautious, hear this out, figure this out, and then take a call.
There is also a bit of important development, Prakash, that I'd want to highlight is Infosys and Temasek extending the digital services joint venture for a period of 5 years. How do you read into that development?
No, I think that's quite positive, and it should. There is no reason for that to be looked at in any other way, given the fact that it's significantly the scope is significantly large for the kind of work that has been done, can be done, should be done. So that is positive. So that's right, exactly my point. If everything is pointing towards growth, why is it not getting reflected in revenue? So that's what we need to. I'm sure there is an explanation. So it's and unfortunately the markets are shut right now, so you don't anticipate any knee-jerk reactions on the stock. But come tomorrow morning and you'll have a more studied, more well evaluated response on the market, and that's going to be at least healthy.
So how are you reading essentially these numbers if you were just supposed to sum up these earnings? And also let's talk about the operating margins, which is the guidance for which has been provided to a range of 20 to 22 odd percent, perhaps maintain. How are you reading into it?
Yeah, so I think what these companies, both these large big boys as you call them, are demonstrating is that TCS numbers did indicate that Q2 could have been probably the first signs of a bottoming out. Infosys, for its own peculiar reason. Remember, there's been a fair amount of change in management and in both these organizations, right? And that always takes time for certain things to get executed. I would be, if this concern that I raised on Infosys' ability to convert TCVs into revenue is not is explicable, then I would definitely feel TCS, Infosys could do very well because of the kind of growth that they have been clocking. And the other thing, by and large, the way I'm reading these numbers now, these two critical numbers are out. There's a lot of money that's gone into mid-cap IT, right? Whether it's or IT companies smaller than TCS and Infi, that money could start also getting redistributed or coming back to some of these big names. So, whether it's Tech Mahindra, whether it's LTI, whether it's Coforge,
All right.
So a lot of money went into all
Prakash, we are just going to leave it at that. And thank you so much for taking out the time and speaking to us. We're just going to be cutting into the presser to hear in the management comments about the concerns that have been raised thus far. Thank you, gentlemen.
As the economic environment changed, we pivoted from delivering transformation projects to also delivering productivity benefits and cost savings at scale. These large and mega deal wins help us build a strong foundation for our future. We continue to see the overall environment where digital transformation programs and discretionary spends are low and decision making is slow. The adoption of Topaz, our generative AI capability set, is helping us deliver more value and to increase market share. The program we've launched for margin expansion is being comprehensively driven across the company. We have 5 areas of focus in this program, and within those 5 areas we have 20 specific tracks, and these are starting to work across the company in a comprehensive way. With that, let me open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Nilanjan Roy, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV 18.
Hi, Salil. Hi, Nilanjan. Salil, first, a couple of questions to you. On the guidance, as always, you yourself are saying this is the highest deal wins in the history that you've had at $7.7 billion. Numbers have been looking good for the last couple of quarters, and yet we've seen the revenue guidance being reduced from 4 to 7% to 1 to 3.5%, and now another 100 basis point reduction. What is the reason for that, and would that imply a degrowth in the second half? As far as the environment is concerned, have we seen the bottom yet? Are there certain, segments that are, where you're seeing more concerns than the others? Or, what is the conversation with clients like? And Nilanjan, a couple of questions to you on the headcount and margins, perhaps after Salil answers.
So thanks. I think first, in terms of the guidance itself, what we are seeing, as I shared in the statement, we are seeing the discretionary programs, the last transformation programs, they've reduced significantly. And we are seeing the decision making continues to be slow. So as we've looked at this quarter, the volumes are still under constraint. And keeping that in mind, we've given a guidance for the full year. The large and mega deal wins really are positioning us very well for the future. But as we see the ramp-ups, which will be towards the back end of the year as we had shared, and even some of those, the ramp-ups and the starts will get pushed out. So that's where we are on the guidance. On the sectors or industries where we are seeing the impact, where we see the impact today is what we'd shared in the past. We see the impact in telecom, in high tech, in areas of financial services that we'd shared in the past. For example, payments, investment banking. We see some impacts in the retail sector as well. So those are the ones where we are seeing the impact. Of course, we have other industries, manufacturing, life sciences, which are continuing to do well.
But have you seen the bottom of it yet? Are you expecting a recovery in the second half, or what is the sense? How far pushed will it be?
So there, we have just looked at what we've delivered in this quarter, which is a very strong quarter. We are going in that view as we see the information quarter by quarter. We don't have a view on where the timing of that is.
Nilanjan, what's the end goal of this margin improvement program that you've been on? You stated that you'll start to see the benefits in 6 to 8 quarters at the time you announced it. What would that look like? Because currently you're still at 20 to 22% guidance. Secondly, there's been a significant reduction in the headcount, about 7,500 during the quarter. Any specific reason for that? And if you could share your hiring plans and the wage hikes that have been deferred, when are they expected, and how would that impact your margin trajectory going ahead?
Okay, I'll take the last one first. So the wage hikes have been announced as we speak. So from 1st November, this is going to be rolled out across all employees. So that's already in place. In fact, Shaji, a new HR head, has already issued necessary guidelines. So that's the easy one. Coming back to the whole margin outlook, of course, from a margin aspiration perspective, we know that we are carrying inefficiencies in our entire structure. For instance, in our pyramid structure, our utilization is, at 81.8%. So in fact, it leads to the same question about, we had a head reduction of 7,000, but our utilization only went up 70 basis points, right? So actually, we still have enough room for utilization improvement going ahead. So as we continue to grow, and in the future, we can actually tighten utilization. And 84 to 85 is something which we have, worked in the past as well. That is actually a margin lever for us going ahead. So we have 5 tracks which we've rolled out, as you know, as under the Project Maximus, name. This is being led by Jayesh personally across all the leaders. We have a track on value-based selling, including pricing. We have a track on, of course, lean automation now, in fact, injected with AI, because that is something now new we are putting in. We have a track on our critical portfolio, on an efficient pyramid, and an indirect cost. So the other 5 areas we are focusing on. Of course, and our aspiration is from where we are, around 21%. Over a period of time, we should see a margin improvement and these projects kicking.
So over a period of time,
Yeah, I mean, you've already seen a benefit this quarter, right? So, I mean, in the margins at 21.2 versus 20.8, from a margin walk perspective, about 50 basis points of this was a combination of the improvements on Maximus, including utilization, the pyramid, etc. So that's all part of this, we're already seeing initial benefits of that.
Thank you, Ritu. The next question is from Moneycontrol, Chandra.
Hi, Salil. Hi, Nilanjan. I still don't get this dichotomy between, you've had a strong quarter. It's way above what people were estimating. I think people were expected a flat quarter. You've come in at 2.5%. Your large deal TCV is 7.7 billion. And yet, you've narrowed your guidance range at the upper end. And, this is a pattern that we are seeing with other companies as well, wherein their TCVs are very healthy, but it's not getting converted to revenues. So why is that? Where is the leakage? Or, is it an overhang of certain projects that are transitioning from the COVID era? If you can give us some perspective on that. Nilanjan, you give an update on the wage hikes. If you can also give us an update on fresher onboarding when are you planning to onboard them? And B, are you hitting the campuses at all, for hiring, because your headcount is also down, as Ritu pointed out. Thank you.
So thanks for that question. I think what we are seeing in the environment today is different things. One, on the digital programs and on the discretionary work, there's a continuous attention by clients to reduce or to stop them. So that's where we see the impact on one side of the revenue. On the other side, there's a tremendous interest in cost efficiency automation, where we happen to have a huge advantage in the market, where we believe we are gaining market share by winning so many of these large and mega deals. Many of these deals have time as they start to ramp up, the way that they are structured, the way the transitions happen. We see those ramp ups, those scaling up of the large and mega deals more out into the future, back end of the year, and as some of the new deals are coming on, beyond that. So those are the two dynamics that we see, and then we combine that. We were fortunate and we executed a very strong quarter, as you rightly point out, and we will continue to execute, but we are also aware and we want to make sure that we communicate that, or what the environment looks like. And things in that environment change in a dynamic basis. So we want to make sure that that gives the range of what our guidance communicates.
So on the freshers, I think when last year we hired about 50,000 odd freshers, and in a way we hired ahead of sort of a demand predicted which we had. Now with that slowing down over this year, our utilization, as you saw, actually had fallen into the 70s, and therefore now slowly quarter on quarter you are seeing an improvement. So we still have a significant fresher bench. With us, we actually of course training them on new skills like Gen AI, SAP, etc. But we still have a way on utilization to go. So at the moment we are not going to the campuses as yet, and we will monitor this every quarter, looking at our future projections, and then accordingly decide when do we go back.
In terms of onboarding the ones you've already given offers?
So we are committed to whoever we given offers. So whoever we given offers, we will onboard them, and these are as soon as projects come up, timing, etc., and they will be onboarded appropriately.
Hi, good evening. Yesterday, TCS said that, they're calling all their employees back to office 5 days a week. What are your return to work plans like? Because we've heard that, employees have been asked to come, say, 2 days a week or something of the sort. What are your plans on that front, and what the variable pay will be like for this quarter? That's all.
So on the variable, we don't disclose that, as you know, in this sort of a forum. On the return to work or return to office, we've been consistent with the same approach for the last several quarters, almost 2 years. We are very clear that we want to remain flexible with our employees. Having said that, every quarter, every week, we are seeing more and more employees back into the campus. And we believe this will continue on. There are some instances, for example, with specific client work or specific type of engagement where we feel it's better that everyone is working together in the office, and for that the employees are back anyway. But in general, our view is we want to support this flexible approach. It's something that we believe is appropriate given how we set up the work from home infrastructure. And so we will continue with it at this stage. But there will be specific areas, whether it's projects or type of work, where for clients, when the need is there, the employees will be on campus.
What's the percentage of people who are now back to office?
So now, every week it's going up. Right now we have, for the individuals who are in the locations of our delivery centers, over 70% of them are on campus at some stage in the week.
Thank you. The next question is from the Economic Times, Beena and Sai.
Hi. Salil, I just want to know, you've seen flattish growth overall in the, revenues, and we've seen North America, which is one of the strongest regions, also growing flat. Europe has seen significant growth. Could you give us a sense on where it has grown in the regions? And if you could also give us a sense on overall, why were the hikes not given in the previous year? If you could just get a reason on, what really went wrong, what are the reasons that you have given the employees? And in terms of new clientele growth as well, if you could just give us a sense, why has it been flat? And given that it's a strong quarter, what are the reasons that we've seen new clientele growth and even additional or existing, renewals have not been as great as it should have been? Given that the next 2 quarters will also be kind of bleak, what is your sense or outlook on the same?
So let me start. I think with the Europe-US point first. We saw good growth in the quarter overall. So 2.3 quarter on quarter, 2.5 year on year. US was positive but small, and Europe was at about 5% in constant currency year on year. We've seen consistently, as you pointed out, over the last few quarters, the Europe growth has been stronger than what we've seen in the US. Some of that is a function of what we are seeing in the industries. So we've seen good growth in manufacturing, for example, and we've seen that reflected. Some of the countries within Europe, we've seen stronger growth. We don't break it out by country, but we've seen some of the countries doing quite well. We've also seen, for example, life sciences have a good growth across the company. While we've seen some constraints in retail, the overall growth year on year for retail is still quite strong, and that's more distributed with the different geographies. In terms of the salary changes, we follow our normal pattern of making the salary changes, and this is what we've done. We don't consider that there was any constraint in the past. There have been years where we've done 2 salary increases in 18 months, so it's nothing where we think that what we did in the past was different from that sense.
What are the reasons that the hikes were not given?
There was nothing different, so there was no question of a reason in that sense.
And just to get a sense of the Europe...
Beena, just use the mic, please.
Breakup. Why did you say the breakup?
Could you give us a sense on which has been the highest growth in terms of European region?
So there we don't share the breakup.
Not even the highest one, if at all. Not even the highest region group.
We don't share.
Sure. Thank you.
Thank you.
Just quick follow-ups. Salil, I just wanted to know what are the client conversations like? What are they actually saying? They're probably drawing up the new budgets from January. So any changes there? And Nilanjan, I just wanted to know, has there been a change in the hike cycle now? Because now it's been will be awarded in November. So is that cycle itself going to change? Thank you.
On the client conversations, I think that there's a lot of discussions that clients are having much more on cost, on efficiency, and they're becoming more cautious certainly not launching new digital transformation programs. When they want to do that, some of that is getting funded by the cost and efficiency programs. And if they're discretionary projects, they're being much more cautious. If there's absolutely needed, they're looking at them. So that's the sort of a tone that we are seeing. When we have a strong proposition, as we do on automation, on efficiency, we get a lot of connects with the client today, and that's where we're seeing some of these large or mega deals coming in.
Thank you.
So on the, I think we had a question on the hikes. I think we'll take it, every quarter we have a look at the overall environment, what is competition doing. So there's nothing decided in terms of when the next hike is really.
The next question is from the Hindi business line, Haripriya.
Hi guys. One, how are the pricing conversations changing given the macro environment? Have you had to budge on to be competitive? Another, want some color on the kind of AI deals that you're signing. Do you think the revenue translation here will be faster and better than the other sort of deals? And yep, these are the.
So the pricing is easy. I think it's largely been stable. Some quarters we see some pressures. Some quarters, there are some clients who come back with discounts. Some clients we are able to push, a price rise, etc. But by and large, it's been, quite steady. I don't think anything specific on a longer term basis.
And on the projects, I think you said for AI projects?
Yeah.
For the AI projects, I mean, those, we're doing a tremendous amount of work on generative AI. We're working with open source and proprietary large language models. We're working in a way where we look at narrow data sets that promotes what is going on within a client. We've developed an extremely well thought through methodology of what clients can look at when they go into an AI transformation. And with all of this is in Topaz. And with that, we're seeing good resonance with our clients on Topaz. We're training large numbers of our employees on that. The revenue translation today, these are small projects. So we are not in that stage where this is becoming a big part of the revenue. But we feel very good with the type of capability we built. And we start to see good traction, whether you look at analyst ratings or how our clients are looking at what we're developing. We feel positive about that.
And in terms of the sectors that you have flagged caution for, which one do you think in going forward would bounce back earlier? Where do you see more recovery happening fast?
In terms of which sectors will come back?
Yeah, bounce back.
So we don't have a view on that at this stage. We know that the ones I'd shared before, within financial services, some of the elements, for example, payments or investment banking or in the high-tech area or the telco area and parts of retail. We see weakness there right now.
Thank you. The next question is from the New Indian Express, Uma.
Good evening, gentlemen. Given the present macroeconomic uncertainties and war situation, how are you looking at the Middle East market right now? And do you have any clients in Israel?
So we have a business which is in Israel, in that part of the region, and there we have with what's going on there, we are saddened by it. All of our employees are safe within that business.
Okay. How many employees are there, if you could tell us?
We don't share that.
Okay. Talking about Gen AI, how many employees have been trained so far? I think recently you were saying that 50,000 will be trained. So how many have been trained?
We are over that number in terms of the generative AI training, but it is every week or every quarter that number is expanding. We built, for example, 34 new courses which our employees are getting trained on. So in generative AI, every few weeks there's a new large language model or a new type of data set which emerges. We are working with many of the main players in terms of them being partners with us to build on that capability. And we've got our own data sets that we've built with these large language models, with the open source or proprietary platforms, so that we can start to give benefit of that to our clients.
Thank you.
Thanks, Uma. The next question is from the Financial Express, Samir.
Hello, sir. So I know that you are not disclosing the number of employees in Israel, but can you put a color like whether the significant number of employees are locals there or Indians? And the other one is, yeah, there has been, we saw some marginal improvement in the margins, but what is your desired level of operating margins, let's say like in 1 or 2 years? Thank you.
Margin, Lanil will come back in a second. The employees that we have in Israel are from Israel itself, primarily.
So the margin, I think we've asked that our aspiration continues to be to grow our margin from where we are. We are at 21. We've already seen some benefits of the program we've launched between this quarter and next quarter, and of course we have a number of these tracks, and we think they will start kicking in and deliver on us every quarter as we speak.
Sure.
Sir, you said most of the employees are locals there. So the Israeli government is calling them for duty. So do you see any significant disruption if the employees go back to the military duty there?
So right now we have within the way we are working a plan to help and support if that's something that happens over the course of the next days and weeks.
Thanks, Samir. The next question is from Business Standard, Ayushman.
Hi everyone. Yeah, so despite weak macros and lower discretionary spending, right, the deal pipeline has been the highest. So what is really driving these deals, I want to understand, and what percentage of these deals would be AI-led? Recently you had a partnership with NVIDIA, right, to launch Center of Excellence. What is the status on that, and the training of 50,000 employees? Have they all been trained? Yeah.
So on the reason why we are winning this large or mega deals, I think that was the first part of the question. What we are seeing is our clients are recognizing the distinctive approach we have with respect to cost or efficiency, and in cases where that saving can be used to fund transformation programs. We believe we have quite a specific approach in that, and that's the reason we think we're winning the market share by winning such a large number of these sorts of deals. That's the main reason for that. AI is part of almost every one of these deals in small ways or larger ways, and generative AI specifically is starting to become a part of it. But broadly, AI is already very much part of it. There are parts of AI which can also be used for automation and for productivity improvement, and we've been working on that for some time, and that becomes within these deals with our Topaz capability. The partnership with NVIDIA is extremely strong. You saw the announcement. All of the work is progressing well. The training, we have already across all of the generative AI well in advance, and on the ones we're working jointly with NVIDIA progressing as well. There we are going to see, as the generative AI market becomes larger, more and more enterprises coming into it, and that's where we are extremely excited. Among others, we have other partnerships also, but this partnership will be very exciting.
Okay, just a quick doubt. With regards to the campus hiring, did you say that you will not go to campuses this year?
So as we see it, I don't think it's likely that this year we are going to be going, but we'll have to watch it every quarter.
Okay. Thanks, Ayushman. The next question is from Reuters News, Varun.
Hi. So I was wondering if you could tell me what percentage of new deals that you saw are renewals, vis-a-vis renewals and long-term deals, and if you're seeing more short-term deals now, and if there's any old projects that you're seeing get cancelled, if you could talk about these.
So on the large or mega deals, we had 48% of those are net new. So they're new deals, the rest are not. On the point about older projects, we see where there's discretionary work, that's where clients are slowing down their spend. And where there were transformation programs, that's where we're seeing slowing down of the spend.
Thanks, Varun. The next question is from the Informist, Rishabh.
Hi, gentlemen. On large deals, I wanted to understand, are they price to win? Are they margin dilutive? On 2 quarters earlier, you used to give a breakup of digital and core, breakdown. So if you could clarify on that, if you could shed more light on that. Yeah.
On the large deals, so we don't disclose margin on specific deals, but as a comprehensive, if you look at our projects, whether we have large programs, small programs, our margin fits into the same profile as we see for the overall, as an aggregate. On digital and core, what happened at the start of this financial year, so at the end of the last financial year, we had reached a level of about 62% of our work was digital. And at that stage, a lot of the company was digital. So we chose to stop disclosing the breakup because it wasn't that relevant. It was very relevant when we were going a few years ago from 25% all the way to about 60%. So we stopped to share. It was not that relevant a data point.
Understood. On BFSI, it's down in high single digits. Can you clarify on that?
On financial services, as I was sharing before, we see still constraints both on transformation programs, on discretionary work. We see constraints in payments, in investment banking, in some in mortgages. So those are the sub-components of financial services where we see some of the constraints.
Thank you. The next question is from the Deccan Herald, Sakshi Jain.
Good evening. My first question is on the AI
Sakshi, could you just hold the mic a little closer, please?
Okay. First question is on the AI front. Firstly, which stage of training are your employees on? Secondly, what are the kind of queries you're receiving from your clients on that front? And another question for FY25, industry experts do say it could very well be a washout year again. So what is your reading on that front, at least for the first half?
On AI, so the training in terms of the stage, it's, employees are getting trained on the new large language models, how to deploy them. We've also built a large library of assets within Topaz, which are proprietary, but on these large language models. So the employees are getting trained on that, and then they get internally certified. They make sure that they go through testing internally so that they are ready for this work on generative AI. On FY25, we don't have a view in terms of what that will look like. We have a guidance for this year.
Thank you. With that, we come to the end of this Q&A session. We thank our friends from media for joining us today. Thank you, Salil. Thank you, Nilanjan. Before we conclude, please note that the archived webcast of this press conference will be available on the Infosys website and on our YouTube channel later today. Thank you once again, and please join us for high tea outside.